General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay. Okay, now we're in Q4. Last week, we just had Fed fund rate, and we had some earnings. The earnings were pretty good too. So this will be the 29th. Okay, no. Non-farm payroll should be coming out whenever. I can't call this expansion. Whenever the government cut back on. Yeah, this is not an expansion profile. More of a manipulation. It's not really an engaged day. Low. Freezing Fed fund rate. Is the anchor point confirmed? No. And terminus not hit. Let's get the delivery. See how the delivery push, New York AM chop. You already know, take it off. Here, we ran to this bag and this propulsion block. Use this to hit the target hit. Nice delivery for the day, even though it was chopped. No, the propulsion block rejection and the delivery to the objective. Get the H1. We wanted to buy below that open. That happened. We can take this bag off. We can keep this propulsion block. We really don't need it because we can replace it with this low. And then let's take this off because this is Monday, Tuesday, Wednesday. There's 3 drives. Three drives pattern. So I do like CSD here in sell. And target here. I like that plan. The 3 drives kind of like gives me confidence. The only thing about selling here is there's nothing but good news. Tech beat earnings, Trump making deals, peace in the Middle East. This will be the order block. So we break this. This is our invalidation. Let's make it a dotted line. Solid. This is Friday. Okay, so tomorrow we got some yellow folder. If we reaccumulate under Wednesday's low, we could look for buys. But Wednesday's low is a good target right now with the 3 drives. Drives pattern. Low hanging fruit would be previous day's low. Daily's looking slow. Still looks bullish though, and we still haven't hit our daily objective. I'm gonna wig zone this. We'll kind of watch this because we did take that high. Watching previous day's wick. Stand below mean threshold is bearish. See what silver did. I think silver and EU is just waiting on the government shutdown. And then what's crazy is UJ is doing what it want to do. Reselling this does make sense. I do like sales here. It took all day to come back, though. This mitigation block, let's look at the macro. Let's look at the H1. Fundamentally, though, it should be bullish because Powell was hawkish today. They don't want to cut rates because of government shutdown. Broke through this whole high, used it. We didn't come back. Monday high is still untapped. So that kind of catches my eye. We could get this before we start selling just to run this high one more time. This Tuesday could be the low of the week. Hold on. We don't know, but it could be. Let's go here because, well, I don't even think that could be the low. That Thursday could be the high. It could be like this. Go back here. This could be the anchor. Could be the high of the week. We can just be going lower from here. I doubt this is the anchor because I think we bearish, but since the sentiment changed with Powell, it's possible that this could be the anchor. The plan to start the week was go down, but things change and we have to adjust. So this could be the setup to go higher. If I wanted to go higher and I wanted to look for buys, I would want to do it down here. Hold up. Hold on. Get this. OTEs where from here to, well, this is 50% here. Okay. Take off the fib. It's fair value for buying. So if we want to buy, we need to get down here. We can sell here because it's Monday and it captures this liquidity. I do approve selling here, like now, but we have to have areas because we could sell now and just end up doing a sell to buy. Up top the grounds. I still like sales, but if we drop to fair value and the buy setup presents itself, that will be acceptable. So we did hit the 20-day bank level. We still haven't hit this high. The buys look strong here. Still have to wait for fair value to get involved. Hold on 1 second. Okay. Oh, snap, what I do? Undo. There we go. EU looking tacky, but CBDR did give us this drop. Fed fund rate. Okay. Hold on, wait. Cancel that. I don't know what I pushed. We hit one of our higher time frame key levels. I'm gonna start mapping them out like that every Sunday because it does plan out the week for one shot, one kill. FOMC gave us a nice Judas. We reacted off a H4 key level. Because all the H4 colors are that color. It's called a H1. Okay. Kind of breaking back through the New week open a gap. This is the area I wanted to see get ran. That got ran. So now we got us a cool order block down here in case we get retested. We got an instant retest here, so we don't need it. What is this? A breaker block? Yeah. Breaker block doing its job. Looks like we got equal lows down here. We got engineer liquidity. Yeah, watch this, because we break this, we're going through all of this. Sell side liquidity here, and we didn't take this. So you can say this push down worked because this push down respected it. Down candle, respecting this. But it should be bullish. We've been waiting on this to go bullish forever. This could be Judas. And this should take these highs, even though it's really ugly right now. Looks like a lot of European news too. Yeah. At least we're getting fair value gaps and stuff though. Trap order flow still on EU. H1 perspective. But I like buys here. Note the lows did not clear previous week's low. So it's relative equal lows and tons of EU news. With their monetary policy. Let's go to the daily. Yep. So we did get our area. Now we want to buy. We got smash day. We should clear this, but this should be good to buy. We got the Larry Williams smash day candle buy setup on our side. Looking for buys. Should be safe at least until we take out the old weekly high, which I think is the inside. Yeah. Well, this is the high, and this should be locked. And that was the daily correct. Yeah. No weekly high since we are still in the inside week. And I don't think we took the low of that inside week either. Price note. What's that? 15,420, and this is 15,424. So it's higher. Yeah, we're still in the inside week. Okay. No, not engagement. FOMC. FOMC. Fed fund rate. Be true to engage. Not Fed fund rate. What did price deliver? Our H1 levels and H4 levels from shaping the battlefield is laying out the key levels for the week we're using. Except for on NASDAQ, because we had all-time high, we had to find levels all week. Nope. Nah, no framework was today. Staying out is easy. Watch for tomorrow. Sales. But I gotta be nimble. Trump is on a good news marathon. Yeah. Don't fade him. He's not playing. All right, y'all. Peace.